All right, let's talk about those three big government-backed loans that feel like a total alphabet soup, right? Especially when you're staring them down on an exam. Today, we're going to make FHA, VA, and USDA finally click for good. Let's jump right in.
I totally get it. You see those letters on a practice test, and your brain just kind of goes into scramble mode. Wait, which one has zero down payment? Which one is just for veterans? And who the heck needs mortgage insurance? It is a lot to keep straight, especially when the clock is ticking.
But hey, don't worry. We're about to use some really simple but powerful memory hooks to lock these loan types into your brain. The goal? To help you recall them instantly, when it really counts. You ready? Let's do this.
Okay, first up, let's meet the FHA loan. I want you to think of this one as the most welcoming of the bunch. It's our friendly helper, designed to get more people, especially first-time buyers, into their own homes.
So here's our first memory hook, our mnemonic. Just remember, FHA stands for Friendly Help for All. This little phrase is basically the key to everything you need to know. It's friendly on credit, it offers help with a low down payment, and it's available for pretty much all qualified buyers. See? Simple.
And that FHA breaks down perfectly. F is for flexible credit. You can get in with just a 3.5% down payment if your score is 580 or higher. H is for the home insurance you'll need. Now this is crucial. FHA loans require both an upfront mortgage insurance premium, or UFI and IP, and a monthly one. And A is for assumable, which just means a future buyer could potentially take over your loan.
All right, let's move on to our next character in this lineup. This is the VA loan, and its purpose is crystal clear. It's the vet's ally. It's designed exclusively to help out veterans, active duty service members, and eligible surviving spouses.
The memory hook here is as simple and direct as it gets. VA is for Vets Approved. It's the easiest way to remember exactly who this loan is for. But the real magic is in the details of that approval.
So let's unpack that. The V and A are pretty obvious. It's for veterans, and it's approved for all-in financing, which means zero down payment. But here are two other critical points to burn into your brain. It's PMI-free, that's a huge cost savings, and instead, most borrowers pay a one-time funding fee, which helps keep the program running.
You know, I just have to pause on this for a second, because this is the absolute showstopper. 0% down. For so many veterans, this is the single most powerful feature that makes owning a home possible. Just let that sink in. 0.
All right, on to our final loan character, the USDA loan. Now this one's a bit of a specialist. You can think of it as the rural champion. It's all about boosting home ownership in less populated, rural, and even some suburban areas.
For this one, we've got a mnemonic that's a little gritty, but trust me, it's very memorable. When you think USDA, I want you to think you stay in the dirt areas. I know, it's a little silly, but it perfectly captures the whole geographical requirement of this loan.
And here's how that breaks down. U is for unpaved rural areas. The property absolutely has to be in a USDA designated zone. S is for a shocking $0 down, just like the VA loan. D is a reminder that your income is a big factor. Borrowers can't earn more than 115% of the area's median income. And A stands for the annual and guarantee fees, which are basically its version of mortgage insurance.
Okay, so we've met our three loan characters. Now it's time to put them head-to-head in a little showdown to really cement the differences. This is where it all comes together and starts to make perfect sense.
First, let's tackle the biggest point of confusion, mortgage insurance. It's actually really simple when you look at it this way. FHA and USDA, they both require it, even though they might call it different things. But the VA loan? Nope. It does not. It has that one-time funding fee instead. You got to remember that distinction.
You know, seeing it all on a table like this just clarifies everything. Look at down payment. FHA needs that 3.5%, while VA and USDA are both 0. For eligible borrowers, FHA is for pretty much anyone, VA is for vets, and USDA is for rural buyers who fit the income rules. And credit flexibility? FHA is the most lenient, which makes it that friendly helper we talked about earlier.
So look, if you remember nothing else from today, remember this one sentence. FHA is friendly but insurance heavy. VA is veteran only and PMI free. And USDA is rural with dirt road rules. That right there is the perfect cheat sheet for your brain.
All right, you've got the knowledge. So now it's time for a quick rapid-fire recall challenge to prove it. No pressure at all, just a quick test to lock it all in before exam day. Let's see what's stuck.
First question is up. Who gets 0% down? Take a second, think about it.
That's right. It's both of them, the Vet Sally and the Rural Champion, VA and USDA. Nicely done.
Okay, next up. Which loan has that unique one-time fee instead of monthly mortgage insurance? Think back. You got it, the VA loan. That's the one with the funding fee. Perfect.
And for our final question, which one is our friendly helper for all, the one that welcomes folks with maybe not-so-perfect credit scores? You know this one.
Nailed it. It's the FHA loan. See? You totally know this stuff.
So there you have it. We've taken that confusing alphabet soup and turned it into something clear. And yeah, knowing this for your exam is great, but the real power comes from applying it. So the last question isn't for a test, it's for you. Now that you can tell them apart, which of these loans is the most powerful tool for your clients, or maybe even for yourself? That's what really matters. Thanks for tuning in.